Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. Here's your weekly technical analysis of New York and London sugar markets. I'll start with ice raw sugar. The weekly key reversal down 3 weeks ago was, probably still is, the most significant formation here since the double top over August to September. Yet even this has been subject to the same overhead resistances that we saw back in the double top in August. Notably the heavy congestion from January to February 2017 between 2010 and 21 even, and the upper tine, the broken upper tine, of the December 2020 to April 2021 shift pitchfork, bullish shift pitchfork, very slightly bullish shift pitchfork. It's currently at 2021. Of the two, I'd say the former is the stronger. Meanwhile, the support below is the same as we had in September and October. Basically the February 2021 high at 1894. All the action between the support and resistances would seem to be stabilizing, but a couple of new factors are now entering the frame from below. These are the April to date uptrend, currently at 1882, and its partner since July, the rising medium moving average, currently 1873. Now, these two have been partnered intimately since July. The medium moving average though is currently lagging a bit lower compared to the uptrend, so it's best to keep that in mind. The uptrend crosses up over the 1894 support from below at the end of this week, stroke the start of next week. It is as I said a few weeks ago, and I quote, "This market has what looks like elements of a market being squeezed, but with still plenty of room to maneuver. Just be careful of the downside for the moment." End of quote. That was then, and this is now, and I'd add this additional comment. The room for maneuver now is less than it was then. Ice Europe white sugar. First off, I recall acknowledging that off the top of the daily chart we still have the whole September 2020 today action as a possible bullish bull flag, with a potential topside target X2 in the 560 area. This is originally a very big ask of the market, but then as other targets have been achieved, it seemed appropriate to leave this one, at least for now, just to keep it in mind. Anyway, the market is still nicely moving up and around the middle tine, currently 520.10 of the early August to early September bullish shift pitchfork. This middle tine has some form, as it acted as a rolling higher support in September and can be seen as a market attractor. There are a couple of other features to note. The congestion in early 2017 in the 518 area has a lingering cap on the market, as of only the once managed 2 consecutive closes over it in October, and it was rejected back lower soon thereafter. The other feature is to look at the rising upper trend line of the connected tops from August to October, currently at 534.70. Now this intimates a possible rising wedge pattern or possibly a bull channel. However, the lower trend line for this is still a bit obscure. The best I can give for this is the previously rising, now flatlining short medium moving average, and that's currently at 500.20. But even this one is just a suspicion and not necessarily one I would be wedded to. Anyway, the market is generally moving up along the middle tine for the moment, until it decides it doesn't wish to do so anymore. Hence, so far a pretty good indicator of the bullish angle of attack here. Sugar white premium spread. I have redrawn the broken big bearish May 2020 to February 2021 Andrews pitchfork into a less broken, perhaps big bearish May 2020 to February 2021 shift pitchfork, in an effort to highlight the bearish angle of attack and how it has become more obtuse and flatter, though not by as much as you'd think. Overall, I'm somewhat lacking in confidence about this pattern and only really recognise the upper tine, which sits with the May 2020 to date downtrend, currently at 977 3/4, and is only a 2-pointer at most. Below we now have, after last week's close, what could be 2 significant 50% Fibonacci supports. The big old July 2019 to May 2020 move at 80 1/4, and the more recent May 2020 to August 2021 move at 82 3/4. These two now sit on top of the slowly rising long moving average, currently 77 3/4, that the market now seems to have finally punched up over. This week we've gapped open over last week's action, but since filled the gap. The top side seems limited in resistance, bar the lesser Fibonacci levels at 93 even and 95 even, until the previously mentioned downtrend. One would imagine that perhaps we might see an attempt higher, though to be honest, today has not been the best day to see such an attempt. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.